Hey guys, this is Karthika Kantwal from Apex Fencer and I'm back with your daily dose of charts for tomorrow's trading session consisting of the equity watch list and the index analysis, both of them. But before we move on to what's new, as usual, talking about the trades that we discussed yesterday. Sadly, watch list there were no triggers today. Tata Steel short opened above our selling level, so of course anybody with the right mind would not have shorted it. Other than that, nothing even touched the trigger price at all. So it was more or less a slow day for the equity side of things. Even on the indices, Bank Nifty, I told you not to go for shorts whatsoever, and well, that was reflected. Bank Nifty has been strongly going up. But again, not wasting much time. Moving on to what's new for tomorrow. Starting with the equity segment, watch list as usual. Moving on to the first one that we have is HUL. Now on HUL, we are going to go for a short position based on the recent sell-off, followed by slight consolidation and then again a lower low. We're going to go for a short at the recent swing point, which was also an earlier support level. So role reversal is going to act out as well. So we have a short at 2065, stop loss at 2090, and ideal targets 1% on the downside. The second is Cipla. Now on Cipla, we had a lower low, lower high formation, followed by a higher low, and now microstructure it is again higher highs and higher lows. So both of them are aligned. The lower low, lower high has been invalidated, and smaller higher high, higher low has begun forming. Now what we have here is a long on at 750, stop loss at 740, and ideal targets 1% on the upside, because that has been a consistent strong demand zone, and every time price has interacted with that particular price level, it has gotten a really nice healthy push. Moving on to the third one, M&M, we are going to go for a long. Again, this is slightly counter trend in nature. This is a bit aggressive trade. We have a long at the nearest demand zone. It is a very old support, as you can see, all the way from the 7th month, which is I believe July. So July May last interaction, and recent what we had was taking support again from that level 590. Even one time when it was broken, it was reclaimed pretty strongly and suddenly. So what we have is a long at 590, stop loss at 584, ideal targets 1% on the upside. The fourth, Titan, again slightly aggressive. We have a long at 1185. As you can see, it was a resistance, then broken upside, turn support. Recently was broken on the downside, so role reversal should have happened, but it did not, and today it reclaimed it as support. So we have a long at 1185, stop loss at 1170, and ideal targets 1% on the upside. Simple phase analysis. The final is ACC. Now ACC is a really aggressive short. We are going completely against the trend. We have somewhat of a triple top formation here. It hasn't really formed, so that's not really considered as an entry trigger. The entry trigger is simple phase analysis, same highs, and you might say it's making an ascending triangle, but again, it hasn't made it yet, so you can use that for an entry justification. What we have here is simple lower highs, slightly lower highs. So we have a short planned at 1685, stop loss at 1705 above the swing high, and ideal targets 1% on the downside. Pretty aggressive, but why not? Let's be a bit adventurous. Moving on to the indices, starting with Nifty first. Now on Nifty, we have again closing at a zone since a couple of days. The markets have been closing at our zones. As you can see, I have simply drawn a Fibonacci from the 21st of October first candle to the recent swing low on 30th. So that is being respected pretty nicely. We have 0.618 level where the price has closed. There's also a zone there, double confirmation. So once it crosses this zone, again going by the market sentiment, I will not advise you to go for shorts. So if you want to go long, you can go for long above 11,850 for a smooth target of about 60 points in the beginning to 100 points as your final target. But let's see how it goes. Now coming to the option chain, we have resistance immediate at 12,000 with 230,000 added contracts. Significant at 12,100 with 275,000 added contracts. So pretty far away. Resistance, even the first one, preliminary resistance, is 200 points away. So you can easily take 100 points as your primary target if you are going for a zone breakout trade. On the support side, you have 11,800 with 743,000 added contracts. And significant support 11,700 with 387,000 added contracts. So the puts have been written very aggressively. And if you go to the option chain, you have a lot of call unwinding at the immediate out of the money prices, which signifies that the writers are feeling quite shaky about their positions and they have emptied them at that particular strike price. So let's see, the doors for 12,000 certainly seem open, at least 11,950 to 12,000. I am expecting Nifty to touch before the expiry or on the day of the expiry, who knows. The PCR comes out to be at 0.82. You might say the PCR is bearish, but it is decreasingly bearish because yesterday it was more bearish. So it is gradually cooling down as well. Moving on to the next, Bank Nifty. Now on Bank Nifty, you might notice, for those of you who are actually paying attention, you might notice that the time frame has changed. We are on early time frame. The reason for that is we have a clear established structure formation on 1 hour time frame, and there's very little noise. The zone breakouts are a lot easier to judge when compared to 15 minutes, where you have a lot of violent big candles since the last 2 days. So what we have on 1 hour time frame still is entry on pullbacks only, anywhere near 24,800 or at least 25,000 if you are being very aggressive. But at the current market price, no entries for me unless it breaks 25,800 or 750 decisively. That too with a small stop loss, aggressive scalp trade for on the upside. From the option chain, you have resistance immediate at 26,000 with net 603,000 total standing open interest, but the change is still negative. Significant at 26,300 with 103,000 added contracts. So here too, I guess the gates for 26,000 have been opened, but let's see. On the support side, you have 25,500 with 428,000 added contracts. Significant at 25,200 with 131,000 added contracts. So let's see, long entry at pullback still remains the bias. The BCR comes out to be at 0.84, again decreasingly bearish relatively speaking. Of course, keeping in mind कल का जो PCR था, that was I believe close to 0.98. So let's see what happens. I am definitely not bearish on either of the indices for tomorrow. Go for longs on both. Aggressive if you want to be, or if you can get nice controlled entries, nothing's better than that. This marks the end of today's video, guys. I hope you guys are liking the analysis that I'm sharing and actually making some money out of it. If you are, let me know in the comment section below. I'll be quite happy to see that somebody is actually using what I'm sharing with through these videos. Also, if you want all these exact charts that I have discussed, you can check out the Telegram channel @ApexFinServe. We post everything there before the market opens so that you can actually make use of it in the live market hours. And it's free, so why not? Also, don't forget to like, share, subscribe to the channel, comment something nice. I hope you have a really green trading session tomorrow. Thank you so much for watching. Have a good night. Bye.